Hello friends, I'm C. Arun Tiwari, and this video is a last reminder for you if you have not done your tax planning so far. As you know that March month is almost halfway done, only 15 days you got. So still if you have not done your tax planning, this is a last reminder for you where you can rush and you can still do 5 important tax savings which you have not done so far to save your taxes and maybe save your March month salary if you're a salaried person. So let's begin. So hello friends, as you might be aware, first thing first, I'm going to tell this for the salaried person. So if you're a salaried person, you might be aware by month of February itself, you have to submit hard proof of your tax saving. For example, your LIC premiums, your home loan statements, maybe you have education loan, that education loan statement. So whatever you have declared in the starting of this year, now you have to submit proof of same to your employer so that accordingly your employer can deduct the details. What will happen if you don't declare? Simply you forget about your March month salary because probably the whole month salary can go towards advance tax, right? So first thing first, you declare all those things. If due dates are not done, you can request your HR to extend slightly more days. Take 1 or 2 days leave because understand that even you lose salary for 1 or 2 days, still your tax saving will be much more than your 1 or 2 days salary. Anyhow, so this is a advice from my side. Now let's start with 5 important tax savings which you can do on last minute also to save your taxes. So the very first thing is about NPS. Now lots of people already they contribute into NPS, but you might be aware that you can save additional 50,000 rupees by your contribution. So if you have not done contribution, you can do it one go also. So before March, just don't forget that you deposit your NPS, your own contribution up to 50,000 and you will get benefit on same. Second, tax saving you can do if you are an investor as well. For example, you have invested in stocks for long term. So in that case, what you can do, something which is called loss harvesting. Now, what is loss harvesting? You can Google it also. But in brief, I will tell you. See, if suppose you already have a capital gain in your account, right? Might be you have sold some stocks during the year and there is a capital gain. So you will end up paying additional tax on those profit. But if you want to minimize that, what you can do, if there are stocks which are in loss, of course, they're long-term stocks, so you're not bothered about loss. But what you can do, you can sell those stocks at loss in the month of March and you can buy immediately as the in the month of April. That way, whatever loss is there will be adjusted against your profit and you will end up paying less capital gain. Third investment, which most of people forget, is about medical insurance. So if you are salaried, you might already have a medical insurance from your employer side. So you don't have to bother, you can claim that. But apart from that, you should have a separate mediclaim just as a cover up for in case suppose you change your job or something. So if you're planning, this is the right time because immediately you will get 30% of your premium as a benefit from tax. Even suppose you don't want to do it, you can at least ensure that if your parents are there and you have done some kind of medical checkup or something like that, you keep their bills with you and you can declare up to 5,000 rupees each person as a medical checkup. Suppose they are senior citizen and they don't have any medical insurance on their name and there is any medical expenses during the year, you can claim that also. So keep all those medical bills properly so that you can either submit to your employer or at the time of filing return you can also claim those expenses as tax profit, although the tax saving will not be very big, but again the saving is a saving. Fourth, tax saving you can do, suppose you still have not made a lot of savings or your premiums are not up to 1.5 lakhs and there is still some scope are there, so you can immediately invest some amount either in tax saver mutual funds, or if in case you don't like the tax saver mutual fund because the stock market is quite high, you can even invest in tax saver FDs, fixed deposit. So whatever balance amount is there from 1.5 lakh tax saving, immediately you should put that either in a mutual fund or tax saver FDs. Now, fifth thing is very important. You want to do some good thing, this is the right time. You can make some charity donations to different organizations and you can claim deduction on same also. So the good thing is this, it's always said that the good karma come back. In that case, the good karma will come back very early because just next year when you start filing your return, you can claim deduction on whatever payment you have made to the charity organization. Just ensure they are registered and they issue you a certificate with their PAN number, so that whenever you're filing your return, you can claim those contribution as a tax deduction from your taxable income. Now, 5 things already told. I will tell you one more thing, important part, friends. Sometime what happen, your employer may not accept some expenses and they will end up deducting more taxes. What to do in that case? Or maybe you forget to submit some claims which you should submit. What to do? Don't worry about it. You always get a second chance when you're filing your return. The only thing, as the year ends, keep all those documents in a particular folder or file, either in digital way or digital format or physical format. And when you're filing a return, you show those things to your CA and you just discuss before claiming that whether you are eligible to claim or not. So always, whether your employer has accepted those deductions or not, always you can claim those deductions and you can claim refund whatever extra tax you have paid. Just one advice from my side: without consulting a professional, don't claim an expenses or deductions, because nowadays department generally ask to submit those this thing if there is a difference between like whatever you have submitted and whatever you're claiming during filing the return. So always be prepared with the supporting documents, because if that time they found that you have claimed some expenses or some deductions or some investments without doing that, the penalty can be very harsh. So at least take an advice and then claim. Don't fall for people who claim that they will get a lot of refund from you by submitting some fake documents or doing some adjustments. Please don't go for or fall for them, because they will just take your money and finally they will leave you at the mercy of income tax when the notice will come, and those tax saving will definitely going to be proved very costly. So hope these 5 slightly different ideas I have given, and you should do it this month on priority basis. If you have any other question related to your income tax filing, tax saving, or you have some notices from income tax department, please contact. Our team is providing almost free tax review or free tax notice handling for NRI clients, and soon we are going to launch for other people also. So stay with us. If you just want us to follow your refund or something, you can still contact our team. They can offer you some good advices, some good techniques, so that you can get your stuck refund or you can get rid of your unwarranted tax demands. That's all in this video. Thank you. Have a nice day.